As we look at the board, Bitfarms Ltd is currently trading at $5.60 Canadian dollars on the Toronto Stock Exchange, down about 1.58% on the day. Now, for the majority of U.S. investors, that translates to the NASDAQ-listed BITF, which closed its last session at $3.97 per share, a drop of 2.22%. On the surface, this 1.5 to 2% slip looks like nothing more than the typical noisy day-to-day volatility we expect from a Bitcoin miner. The expectation is that the stock is just doing what it's supposed to do, weakly correlating with the price of Bitcoin, which itself is relatively calm. But the reality is that this minor tremor on the chart is masking a much more significant high-stakes drama unfolding just beneath the surface. The stock is not just drifting, it's coiling. It's a spring being compressed by a massive two-part force, a desperate company-altering strategic pivot, and an impending earnings report on November 13th that is nothing less than a moment of truth. The common belief, the one that probably got most people to buy this stock on their Robinhood app or through their SoFi Invest account, is that Bitfarms is a simple, leveraged play on crypto. You think Bitcoin is going up, so you buy a miner to get more bang for your buck. It's the classic online investment strategy. But let me be perfectly clear, if you still believe that, you are dangerously behind the curve. You haven't bought a simple Bitcoin proxy. You have, perhaps unknowingly, bought a high-risk special situation equity. You own a piece of an industrial, energy, and compute company that is in the middle of a frantic, capital-intensive, bet-the-company transformation, all while its primary business of mining sees its margins crushed. This is not a set-it-and-forget-it holding for a Schwab Intelligent Portfolios account. This is a stock that requires your full attention. The disconnect between what this company was and what it is trying to become is the entire story. Let's look at the recent trading. This stock has been hammered, falling roughly 35% from its 52-week high of $6.60. That slide wasn't just a random correction. It was a direct reaction to the company's own actions. In mid-October, after a massive surge, Bitfarms announced it was raising capital. First, a $300 million proposed offering, which it then upsized to a staggering $500 million in convertible senior notes. The market, especially the institutional desks at places like Interactive Brokers, read this for what it was, a sign of a massive cash burn. While the company has a wonderfully clean balance sheet on paper, a debt-to-equity ratio of just 7.8%, which is almost unheard of in this sector, that's a vanity metric. It's a distraction. The real story is the cash runway. Recent analyses are clear. The company has less than 1 year of cash on hand at its current burn rate. This isn't a growth giant like Tesla stock raising capital to build a new factory, which the market loves. This is a company raising $500 million to fund a risky pivot and, frankly, to keep the lights on. That offering put an immediate ceiling on the stock and confirmed the market's worst fears about its financial health. This is the core tension. The expectation is that you're buying a miner. The reality is that Bitfarms is in a desperate race to become an AI and high-performance computing company. Earlier this year, they announced a major strategic shift. They acquired Stronghold Digital Mining to get access to U.S. power assets, and at the same time are selling off their large-scale assets in Paraguay. They are rebalancing their entire portfolio to the U.S. Why? Because the post-halving economics of Bitcoin mining are brutal. Their own reports from earlier in the year showed their cost to mine a single coin was getting dangerously high. The pivot to HPC is their escape hatch. They're partnering with T5 data centers to build out this infrastructure, and they secured a $300 million debt facility from Macquarie to fund the Panther Creek campus. This sounds impressive. It sounds like they're chasing the same tailwinds that have propelled NVIDIA stock into the stratosphere. But here is the billion-dollar question that the market is asking. Can they actually do it? Building data centers is one thing. Selling that capacity is a completely different and much harder business. They are now competing with established data center giants for hyperscale and enterprise clients. This is the entire gamble. And while we see some institutional interest, like Thames Capital Management taking a new 7 million share position, we also have analysts like Zacks maintaining a sell rating, pointing to a deteriorating financial outlook and skepticism about near-term profitability. This isn't a stable blue chip like Apple stock where you can count on buybacks and dividends. This is a binary bet. Before we get to the final outlook and what to watch for, I want you to head to the comments. I need to know what you think. Is this AI pivot by Bitfarms a brilliant, forward-thinking move to save itself from the death of mining margins, or is it a desperate, last-ditch Hail Mary that will just burn through their new $500 million war chest before they sign a single real customer? Let me know your take below. So, for anyone just checking this on their Fidelity mobile app or looking at their individual brokerage account, what does Bitfarms do? Historically, it was a global Bitcoin miner. It owned and operated massive data centers filled with specialized computers, ASICs, in Canada, the US, Argentina, and Paraguay. They used massive amounts of power to secure the Bitcoin network and earned BTC as a reward. But as we've established, that model is under existential threat. Now they are trying to become a North American energy and digital infrastructure company. They want to use their 1.3 gigawatt energy pipeline, 80% of which is now US-based, to service both their own, presumably smaller mining operations, and this new unproven HPC AI business. They're trying to go from being a commodity producer to a high-tech landlord. This all brings us to the Super Bowl for this stock, the Q3 2025 earnings call officially scheduled for Thursday, November 13th before the market opens. This is it. Everything is riding on this call. The entire investment thesis, whether you're a long-term holder with Fidelity Investments or a self-investing trader on Robinhood, will be validated or destroyed on that day. The expectation is for another set of mining numbers. The reality is that the mining numbers almost don't matter. Here is what we actually need to hear from management. First, we need a crystal clear, all-in cost to produce one Bitcoin. Not a direct cost, but the real, fully loaded number. If it's still high, the mining business is a lost cause. Second, we need a hard and fast number on the cash burn from Q3 and a concrete projection for their cash runway after the $500 million note offering. How long does this new capital buy them? But the third, and by far the most important thing we need, is proof. We don't want to hear about their pipeline. We don't want to hear about strong interest from hyperscalers. We need management to get on that call and announce the names of clients who have signed binding contracts for their new HPC AI data centers. If they can't do that, the entire pivot is just a fantasy. If they come out and name a major enterprise client and show that mining costs are down, this stock with its low debt-to-equity ratio and fresh cash could be seen as a brilliant turnaround story and could easily double. But if they are vague, if they talk about progress and discussions, the market will see right through it. It will confirm the pivot is a money pit, and the stock will likely break its recent lows of $3.82 and enter a new, much more painful phase of decline. So as we wrap this up, the tension is clear. The expectation is that you own a volatile crypto stock. The reality is that you own a high-stakes, highly leveraged bet on a corporate transformation. The stock isn't just wiggling around with Bitcoin. It is locked in a battle between its high-cost legacy business and its very expensive, unproven future. November 13th is the day we find out which one wins.